Every year, more than $120 billion of viable African trade goes unfinanced.
Not because the goods don't exist, not because the buyers aren't ready,
but because the financial infrastructure to carry the transaction through, the trust infrastructure, was simply never built for people like us.
Trade finance is the oldest financial instrument in the world. At its core, a mechanism of trust, a way for a seller to know they will be paid, and a buyer to know they will receive what was promised.
That trust is expressed through ancient instruments, such as a letter of credit, a document issued by a bank guaranteeing payment once agreed conditions are met, used for centuries.
But here is the problem. That instrument, in the form most African small and medium exporters encounter it, is paper-based, prohibitively expensive, and functionally inaccessible to any business that isn't big already. SMEs make up 90% of African businesses and over 60% of employment. They are the economy, and the system designed to connect them to global buyers was never built with them in mind.
Over the past 2 decades, international banks have withdrawn from Africa at scale, a process called de-risking. Compliance costs, perceived sovereign risk, and the burdensome weight of international banking regulation have made them retreat.
In some cases, the Nostro accounts they're required to maintain with international banks now lock up so much cash that there is pretty little left to deploy at home.
Neofingo is a digital finance corridor. At its core is a new class of financial instrument, the Neo-LC, a digital letter of credit, designed for the world as it actually is, mobile, AI-enabled, and built on open standards.
The Neo-LC is programmable. It meets international standards, and it is accessible to an SME on a phone in Kumasi, in the same way it serves a trade desk in the City of London.
An AI assistant, Nomi, guides them through letter of credit creation, document validation, and submission, step by step, in plain language.
The expertise oozes comfortably from the system. The user simply has to show up with their goods and their ambition. A Nostro-light settlement model means African fintechs hold accounts with London neobanks, but post dramatically less collateral, because shared data replaces blind trust. Freed capital stays in the African economy. Development finance guarantees scale it further.
The Neofingo protocol does not operate outside of policy. It is designed to work with regulators, not around them.
The Bank of Ghana's regulatory policy sandbox, a controlled, supervised environment in which the protocol's proof of concept can be tested, evaluated and refined, shall provide full regulatory visibility, innovation and accountability sitting together at the same table. Britain's Electronic Trade Documents Act 2023 solved a decades-old barrier. Legal ownership of a digital document, London is now the global architect of digital trade law. Neofingo exports that architecture. Powered by Ghana's 24-hour economy initiative, is an ambitious national program to expand productivity around the clock, formalize previously informal economic activity, and build the digital infrastructure for sustained export-led growth.
Neofingo is, in a very real sense, the financial software for that productivity hardware. If Ghana's industries are working through the night, they need a settlement and financing system that keeps pace. Round-the-clock trade demands round-the-clock finance.
The After Hub, the Secretariat's digital platform, is the orchestration layer. Transactions through the hub demonstrate within the Bank of Ghana's sandbox that the architecture works in the real world. Consider triangular trade, goods produced in Ghana, financed and enhanced in the United Kingdom, and sold to buyers elsewhere on the continent. Each leg of that triangle can now be financed, tracked, and settled through a single standards-aligned protocol.
Then there is diagonal accumulation. Under trade rules, This concept allows inputs from multiple African countries to be treated as originating from a single source for duty-free access to target markets. Neofingo represents a new model of development cooperation, one that takes African countries like Ghana truly beyond aid. A new logic built on a commitment to those who have been locked out the longest. SME exporters, especially businesses led by women and young people, are the top priority, because if they do well, the entire society lifts up.
The dream is big indeed, onboarding 25,000 SMEs over the next 5 years, reducing their transaction costs by 40% over the period, and ensuring a tenfold increase in AI-SUR, accelerated letters of credit issuance, and critically, boosting the exports of Ghana's largest productive base, small businesses, to scoop and pump hard currency into the Ghanaian economy at scale. Nearly 300,000 people of Ghanaian heritage live in the UK. They trade informally because the formal channels were never designed for them. The London to Accra campaign positions the corridor as their bridge.
Britain exports centuries of legal and financial creativity. Ghana and its African counterparts bring local market knowledge, SME networks, and the scalable demand that makes the whole corridor commercially viable. Neither is the donor, neither is the recipient. Both are builders. Trade finance has always been about trust. Neofingo is a new infrastructure for that trust, one that the smallest exporter and the largest institution can share equally.
If you are a business that exports, an institution that finances trade, a regulator shaping the rules, or a policymaker building the scaffolding for the next decade of African growth,
the corridor is open, the protocol is ready, and the moment is now.